Aiysha Hayes here with Hayes Tax Relief. You know, millions of taxpayers find themselves in trouble with the IRS for a variety of reasons. But I want to talk about 6 ways or 6 areas where I've seen some of the taxpayers that come to Hayes Tax Relief. I want to share with you some of those ways that I have seen, some of the most common. So, number 1, failing to file tax returns. Guys, this is like the easiest way to invite the IRS into your life, and you don't want them in your life. So a lot of times I see those who are expecting a large tax balance or any size tax balance that they can't afford to pay. A lot of times I see those individuals, they won't file tax returns. But guys, that's hurting you, because when you don't file tax returns and you have a balance owed, you're going to get hit with some penalties. And not only does the IRS charge penalties on the taxes, they charge penalties on the penalties. So guys, go ahead and file your taxes. And if you have a number 3 or more years that you need help filing, give us a call. We're happy to help. Number 2, incorrectly reporting income. This is another really big area. And it's an easy way for the IRS to uncover that you have not reported all your income. The IRS is simply, they operate off of a matching, kind of like a matching game. So they look at what you sent in, what you've reported on your tax returns, any W-2 income, any self-employment income that you may have, received through like a 1099, any retirement income, any distributions, because it's easy for them to find out, because they get the same information from other third parties. Think your employer who issues a W-2, they send that into the IRS. Think your retirement company, whoever the financial institution managing your IRA or your 401k or whatever type of retirement account it is. They are also sending in documentation on how much money you've taken out of that retirement account. That's called a 1099-R. And also, some of the self-employment income that you receive, guess what, guys? The people you're doing work for, 9 times out of 10, they're required to send in a 1099 NEC as well. So that's also being reported to the IRS. And when those items don't match up with what you've reported on your tax return, oh man, you may have just put yourself in the running for a tax audit, and you don't want that. Number 3, claiming excessive deductions. Now, I know none of us, we don't want to pay taxes. I don't want to pay taxes. But guys, do not claim more deductions than what you're entitled to. And where I see this the most is with business owners. If you're not entitled to a deduction, or if you're tempted to just, inflate it just a little bit, how would the IRS know? Guys, it's not worth it. Just don't do it. There is a such thing as random audits. And you don't want to find yourself on the end of a random audit and having to defend all of those deductions that you took, especially the ones that might be a little excessive, or you might get a little creative. Guess what? If you can't properly support those deductions, they're going to disallow all of it and leave you with a big, hefty tax bill. And remember, it's not just the taxes that you're going to be paying back, but also penalties and interest, and that can really add up. Number 4, ignoring IRS audits. Guys, when you get something in the mail asking for, additional information, or that they need additional documentation or an explanation, that is actually an audit. It's called a correspondence audit. Don't ignore those, because a lot of times it's just something small that they're asking for, just additional documentation. And as long as you open up the envelope, read it, read the letter inside, and respond and give them what they're looking for, you'll keep yourself out of trouble. But it's when you ignore those letters and notices and ignore the audit, that's when you are hit over the head with a tax bill. Because if you don't respond, the IRS automatically assumes that they're right. And most time, guys, the IRS is not right. So please, please, please do not ignore audits. Number 5, engaging in tax evasion schemes. Now again, none of us wants to pay taxes. I get it. We have other better things that we could spend our money on. But please, if you want to find ways to reduce your tax bill, that is okay. And it's perfectly legal to find ways using the tax code to find ways to legally reduce your tax bill. But don't go off of some tax tip or, real kind of crazy tax scheme that you heard one of your buddies talk about. I see people get into trouble with that all the time. Just taking wrong advice and getting involved in just tax schemes. Nothing wrong with legitimate tax strategies, tax reduction strategies. And for those types of things, you want to work with a qualified professional who can help you identify those tax strategies and help you properly implement those tax reduction strategies. And number 6, not making estimated tax payments. This is a big one. If you're a business owner or a self-employed, you're going to want to make quarterly estimated tax payments. And those are essentially voluntary payments that you're sending in on your own on a quarterly basis. Sometimes you can do it monthly if it's easier for you. But it's key because that self-employment income or that business income, depending on the type of business it is, there are no taxes being withheld on the money that you are receiving from the company. Because think about it. If you're a W-2 employee working for a company, when you get your paycheck, there are taxes already being withheld. You don't have to think about it. But when you're self-employed or have a business, there's no one withholding the taxes. So you have to do it. I see a lot of people get into trouble in this area because they're not sending in estimated quarterly tax payments. And I'm telling you, it's not fun. At the end of the year, when you go to file your taxes and you haven't sent in a dime to the IRS, and you're hit with this huge tax bill, or you see this huge amount that's owed on your tax return, that's not fun. And a lot of times when you have this large tax bill, you haven't saved up throughout the year, and it's a surprise, and you don't have the money to pay it. Guess what happens again? When you can't pay that balance in full, that's right, penalties and interest. So guys, if you find yourself in trouble with the IRS and you owe $20,000 or more, or you're under audit, just give us a call. We are happy to help and explain your options to you and how you can get out of tax debt. Give us a call at 704-298-1040. We are here to help and help you take your life back from the IRS.